All right, what is good, everyone? So this video, I want to do a top-down analysis video and how to find your bias because it is something that most traders do not really know how to find. Like, that you may know a little bit of a strategy, you may know a little bit of psychology, but how to actually do a top-down analysis and how to find your bias. Most people just stay on the 15-minute and 5-minute time frame and expect to know where price is going and to find the drawn liquidity based on that. And I'm telling you, that is 100% false. In order to actually become a profitable trader, you need to know what the higher time frame looks like and then slowly scale down by looking at the 15-minute gaps and then looking at the liquidity sweeps on the 15-minute, etc., etc. And if you do not know me by now, I have well over $300,000 in verifiable profit and payouts, and I've generated well over $500,000 for my private students. So how to actually do top-down analysis? You always want to start on the higher time frame, whether that be the daily, 4-hour, or 1-hour. And the first thing you want to do when getting on the charts, once again, get on the higher time frame. And me personally, I look around like the 1-hour. And what you do is, let me delete some of this stuff because it looks a little bit crowded, is you look at the trend of the candles. So we see right here, if we were to be trading right here, let's say all of this stuff is cut out, we would look at this and what would this trend look like? It would look like an obvious uptrend. So what would we be looking for? We'd obviously be looking for buys, but obviously that is not the only thing that you're going to be trading off of. And then let's say we look at right here. Let's say we hop onto the charts and we're on this candle. We see this much of a downtrend on the hourly time frame. We have been in a downtrend for what? Or we went down a whole 1.230%, and we've been going down for around 5 hours now. So that means we are looking for shorts, continuation shorts. But obviously that is not the only thing you want to do. The next thing you want to do is you want to look for higher time frame gaps. What ones have been filled, what ones need to be filled, and you want to look for lows. But we're going to get into the lows and liquidity sweeps later. So right here is a perfect example of we're in an uptrend, but why am I still going to take a short? Well, the reason why I still took a short right here, this was on Friday, is because you maybe see we're on the 45-minute time frame and I'm still taking a short. That's trading against the trend. But when you actually look at it from a different persona, you look at the gaps. That is kind of what that's more important than trend, basically, because you're looking at what price is looking to fill. Another thing is just because we're bullish on the 1-hour does not mean that we're still bullish, because when we go on the daily, right, we are obviously bearish, and that is the main thing. And when you see pull-ups like this, that is not random. We see a daily Fairway gap right here, and you see we touched into the CE of the Fairway gap. So price retracing after touching that Fairway gap is completely normal, and I feel like we're still going to be going down. That is how to find like liquidity hunt and stuff, because once again, you can't just judge everything based on the trend. You cannot. So what I told you so far is look for the high time frame trend and look for gaps. Has the CE been touched? What are looking to get filled? Right, so is a Fairway gap unfilled right now, but it looks like it's going to get filled, then you would expect a retracement there and then a continuation. But we're going to get into that later here. But once again, top-down analysis, you start off on the higher time frame. So a basic full overview here. Let's go in a full example. So we just hop on the charts, right? We see on the daily time frame that we're going bearish. And now obviously we were looking for bearish, but then we go down to the 1-hour and we see now we're bullish. So would that mean that we're in a bullish trend? Well, the reason that we went bullish, once again, is because here we have a gap. We filled we filled the CE of the daily Fairway gap, and that obviously is a big reason for price to push up a little bit, filling orders into right here and then continuing lower. And that's what I knew, and that's the reason why I took shorts on this day. So now after knowing why price retraced and is going higher, I still think we're in a downtrend because even though we're in an uptrend, we are still in a downtrend because it's inevitable that we're going to scale up. So now, after tapping into this, I am still looking for shorts once again, and now I'm looking at the gaps. What ones are looking prominent to get filled? And my immediate look was right here, this hourly Fairway gap. We see an hourly Fairway gap, and we were about right here on market open, and we have not touched into it yet. Or I'm sorry, it would actually be the 30-minute Fairway gap that we touched into, which is still high time frame and still prominent to touch. So we can still obviously use it because it's a high time frame. It's a 30-minute Fairway gap. So now after knowing the retrace, and then the retrace again is inevitable, we're obviously looking for a Fairway gap to get filled and then an SMT. We look for the higher time frame SMTs. We see right here, we see SMT at the high, SMT at the high right here, SMT at the high. And then while tapping into this gap, we also see an SMT at this high and this high. And now what does that mean? That means this price is obviously in a very bearish downtrend. If you don't know what SMTs are yet, I posted a full video breakdown on what SMTs are. It's inside my strategy video. So now we identified the trend. We identified what fair value gaps are going to get filled and why they're going to get filled. And we also identified what the higher time frame SMTs look like. And all of them are leading into a bearish narrative, meaning that we're looking for continuation shorts. So that is basically just identifying our bias and our trend. Now, after all of that, on the higher time frame, we scale down to the 15-minute time frame. But the 15-minute is very good for drawing out your OTE zone, which is what we do right here. We take our fib retracement tool, which is the main part of my strategy. I also use my custom levels, and we draw the high to the low, the most prominent one, and we get our levels right here, the 618, 706, and 79. And now we're looking for retracements inside of this zone. And that, and the 50-minute and 5-minute is usually where we draw out our fib retracement and our OTE zone. So now, not only do we know that price is going bearish, we also fill bearish for value gaps, and now we also have bearish SMTs. We also fill out my OTE zone, which is also going in a bearish narrative. Everything about this trade was bearish, and that is the reason why it dropped so much. And then we just scaled down to the 5-minute time frame, basically just looking at price. This is where discretion comes in play, because now we know our full high time frame drawn liquidity and our full high time frame bias. Now we just scale down to the lower time frame and identify what context and price is doing. And if it looks like we're going bearish and we create a fair value gap like this looking to get inversed, well, then the only thing to do is wait for a fair value gap to get formed, which one got formed exactly right here, and we inversed it right after that. So now what is left to do after identifying our bias, our trend, our fair value gaps are getting filled in the bearish, everything about this trade is bearish. Now we found a bearish 1-minute IFG, which is our confirmation to create shorts either down to this low or to our higher time frame low, which price hit the whole way down to here, which has been a 1 to 11 trade. Now obviously I didn't take that. I took this one, put my stop loss, or I put my take profit right here, which entered out to a 1 to 5. And hopefully you learned a lot from this video, and hopefully now you actually have a structured step and system to actually finding your bias and your daily drawn liquidity. And if you learned something, then consider subscribing for more videos like this, because I post educational content like this a lot.